Hello from Chicago. Alan Knuckman high above the trading floor here at the CME Group, talking energy with a focus on crude. Down 25 cents today, closing at 65.65, but interesting action at the start. So Sunday night, the market surged. It opened up at 66.55, just a dime from the 3-year plus highs at 66.66 that were posted on January 25th, which is 2 long months ago. Now, part of that was a dollar decline. The dollar was down below 89 for only the second time since February 1st. It had been trading in a range between 88 and 90, so that's the midpoint, ducking down. It's been going sideways now for about 2.5 months. Now, if it can break down one more time, that low at 88 is down below. That was a 3-year low. So we had the markets open up at their highs and essentially decline for the rest of the day. So for the last few hours, most of the day, most of the session anyways, the session starts on Sunday night at 5 o'clock Chicago time and runs until this afternoon. So we've been trading between 65.80 and 65 since 10 p.m. last night. So a consolidated range after that higher open. Also, we saw the China launch, not trade war, not this tough talk, but it actually launched the long-awaited yuan-based crude futures contract in Shanghai. So that did actually jump 4% on the session. Now the question is, can this become another oil benchmark like we have the WTI here in America? So they've had some safety guards put in place with this contract. It's going to have a higher deposit requirement to stop speculation. Looking at today's action, it could be turned profit-taking after opening up that close to the highs when it couldn't get there. You saw people take some profits because last week it was a big surge in crude. Crude added 6% last week, 6% up $3. That's a big turnaround. It had been trading between 60 and 63 for a couple weeks, and when it broke out, it targeted 66, got there last night. We'll talk about that upside target in a second, but we also wanted to make you aware that the stock market was down that same 6% that crude was up last week, but stocks are coming back today, up 2%, regaining some of that lost ground. So that 66 target has been hit. The next upside target, when we take out those 3-year highs at 66.66, that target's $75 a barrel. The distance of the sell-off, the $8 sell-off that we saw from that January top down to those recent swing lows, on top of the old highs, that target's 75. So that's the upside target we've been talking about for weeks. We'll see if we can get there. And 63 is the support because that was the old breakout point. So to summarize, crude oil today down a quarter, but very close to new 3-year highs.